Hello, and welcome to another homework help video. This video continues a series on typical banking problems found in introductory macroeconomics and finance economics courses. This video looks at calculating the change in required reserves of a bank when an individual withdraws money from a bank that already has deposits. Before looking at a typical problem statement and a way to answer the problem statement, let's review some terms and concepts such as fractional banking, deposit, withdrawal, reserve ratio, and the required reserves. Also, let's take a minute to review the formulas for calculating required reserves and the change in required reserves. One of the keystones of understanding modern banking systems is fractional banking. A fractional banking system is one where banks and other thrift institutions, like savings and loans and credit unions, accept money from the public. They use this money to make loans and collect interest on the loans. However, the government requires banks to keep a portion of the money they accept in case the public wants access to it. A deposit is the money individuals place in the bank for future use. A withdrawal is money taken out of the bank by an individual. The reserve ratio is the ratio of required reserves to deposits. Problem statements represent the reserve ratio either as a decimal, or a rational number, or a percentage. If the problem statement represents the reserve ratio as a percentage, divide the percentage rate by 100% to get the decimal, rational number. A bank's required reserves are part of its deposits, and the government requires them to be kept on hand to satisfy the customer demand for their funds. The formula for calculating the required reserves is required reserves equal deposits times reserve ratio. If the bank already has reserves, sometimes a problem statement will ask about finding the change in the amount of reserves held by the bank. The change in required reserves uses the same basic formula with a slight difference in presentation. The formula becomes change in required reserves equal change in deposits times reserve ratio. The scientific community, including economists, uses the Greek letter delta to represent the concept of change. So, the words change in may be replaced with a delta in the formula. So, replacing change in with the Greek letter delta, the formula is rewritten as delta required reserves equals delta deposits times reserve ratio. If the person deposits money, or puts money, into a bank, the deposit change is positive. The formula for this situation is change in required reserves equal change in deposits times reserve ratio. If the person withdraws money, or takes money from the bank, the change is a negative change in the bank's deposits. The formula for this situation is change in required reserves equals minus change in deposits times reserve ratio. Now, let's look at a problem statement with a reserve ratio given as a decimal number, or rational number. A bank has $7,000 in deposits. Marina withdraws $2,000 from the bank. The country's central bank has a reserve ratio of 0.025 of their deposits. How much has the amount of required reserves changed as a result of Marina withdrawing $2,000? Let's look at the strategy to find the change in bank's required reserves given a new deposit of funds into a bank with existing deposits and a reserve ratio set by the central bank. 1. Write the formula for calculating the required reserves. Change in required reserves equals minus change in deposits times reserve ratio. 2. From the problem statement, locate the change in deposit amount and substitute it into the formula. 3. From the problem statement, locate the reserve ratio and substitute it into the formula. 4. Multiply the amount of the deposit by the reserve ratio. Now, let's apply the strategy to the problem statement. 1. Write the formula for calculating the required reserves. Since Marina is withdrawing money from the bank, the change in the bank's deposits is negative. 1. Write the formula for calculating the change in required reserves. Since Marina is withdrawing money from the bank, the change in the bank's deposits is negative. So, let's use the formula. Change in required reserves equals minus change in deposits times reserve ratio. 2. From the problem statement, locate the change in the deposit amount and substitute it into the formula. In the problem statement, Marina withdraws money from the bank. Its total deposits will decrease. Since Marina's withdrawal decreases the bank's deposits, let's substitute a negative $2,000 from the problem statement into the formula for the deposit. 3. From the problem statement, locate the reserve ratio and substitute it into the formula. In the problem statement, the central bank set the reserve ratio to 0.025. So, let's substitute 0.025 from the problem statement into the formula for the reserve ratio. 4. Multiply the amount of the withdrawal by the reserve ratio. The amount of withdrawal from the problem statement is a minus $2,000 from the bank's deposits, and the reserve ratio is 0.025. So, multiplying the withdrawal of $2,000 by the reserve ratio of 0.025 is a negative $50. So, when Marina withdraws $2,000 and the central bank sets the reserve ratio to 0.025, the bank's required reserves decline by $50. One of the essential pieces of knowledge for understanding modern fractional banking is the idea of required reserves, and an important skill is calculating the change in the amount of required reserves a financial institution needs to hold. The video reviewed some key terms associated with fractional banking, including fractional banking, deposits, withdrawals, reserve ratio, and required reserves. The video also introduced the formula for calculating the change in required reserves. If the problem asks about the change in the reserve requirements due a deposit, the formula is required reserves equal deposits times the reserve ratio. If the problem asks about the change in the reserve requirements due a withdrawal of money from a bank, the formula is minus required reserves equal deposits times the reserve ratio. The video provided a strategy for finding the required reserves, given a deposit and the reserve ratio. Finally, the video worked on a problem statement using the strategy. If you want to try a practice problem independently, there is a link in the description below. If you have any questions, comments, or suggestions, please put them in the comments section below. Until the next homework help video, best wishes on your economic studies.